Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street today. It has been largely a subdued and a muted trade as far as the benchmarks are concerned. For the Nifty, about 400 points lower for the Sensex as well. Although they are trying to be off the lowest point of the day, but an all across broad-based sell-off is what you've been witnessing through the trading session. Be it the broader markets or all the sectors of the Nifty index, they're all down in the red today, especially led by the losses in the banking space. The Nifty Bank is down by 1.4%, led by losses in both PSU banks and also the private banks today. Realty is down in trade. Sharp sell-off now is being also seen in the IT pack, that's down by 1.3%. Apart from this, you're also seeing losses in the pharma pack now escalate 1.1% down for this one too, and the FMCG stocks are falling a tad bit, and also along with the auto names as well. The market breadth clearly in favor of the declines today, with Adani Enterprises as the top Nifty loser at this hour, 3.6% lower in trade. Nestle, SBI Life, HDFC Life, those life insurance names, and Induslnd Bank all down in trade. But time now to welcome our guest to really understand what does she really make of the kind of fall that we've been seeing. Jain joins in. She's the president at 361. Welcome, Anu, and thank you so much for taking the time out for this discussion. The last time I did speak with you, we were talking about, what fresh triggers that can the markets really look at. Now, with all the major triggers behind us, we've had the budget, we've also had the RBI policy, US FOMC. Most of this has been digested, and now we've also seen the Adani jolt and the FIS sell-off that has followed. And after that, also, the markets are still stuck in a range. We were thinking that perhaps the markets are moving on from the Adani jolt as well. But somehow, what is exactly keeping the markets on the edge, do you believe?
Well, thanks, Sakshi, for having me over. I was smiling when you were saying that, because you were saying that we're thinking of what could have happened. None of us could have anticipated the Adani jolt, which all of us got. Yes, the market is yet to digest that, and there has been an impact not just on Adani, but obviously on the banking sector. I was just going through yesterday on the fact that, when around the budget, when you were at 18,000 levels, it was the Bank Nifty which was leading. Right now, when we've come back to that 18,000 yesterday, it was essentially a pullback into the tech sector. And it was very indicative of the fact that though the markets were back to 18,000, people were really not betting on growth, which is a factor which banking would play a proxy on. People were basically playing on safety and hedging, which tech was. Because if you look at frontline tech, given the way US and Europe is moving, I mean, 12% growth around is what would be more than, I would be very satisfied with TCS and Infi giving us in dollar terms a 12 to 13% growth. Whereas banking, I think, could give a credit growth which could be much higher, but because there was a perception of risk, given all that's in the air, it is very evident that we've not elections. It is going to be a year where inflation, while it's not been what it's been a worry for the last couple of quarters, it'll still be an issue. So I think it's more sideways, but I think every time you collapse for whatsoever reasons, whether it is an individual company reason, a sector reason, good companies are always an opportunity to buy. As I was saying that, probably everybody for this year has been saying that, debt may give you a higher return than equities, but then equities more than makes up for it in the year it outperforms. So it's a good year to start building, though people are more biased towards debt this year. As long as you're picking up quality jewels, I think they will really outperform in the front, after about 1 or 2 quarters.
Okay. We've also seen this $4 billion sell-off by the FIIs, and that has really turned India as the worst performing market in the world now. Do you think this change in the tide will actually last long and hurt the absolute returns for investors?
I mean, Sakshi, honestly, that's not a barometer of trade anymore, because if you look at last year, I think FI sold in last calendar year about 1,22,000. It was our DII money, it was the SIPs which have started flowing in, which kind of we were an outperformer despite all the world markets kind of underperforming. I think in the last 1 month specifically, because of this whole issue, because we were outperforming, there has been more outflows. But the very fact that our financial investment as a part of our saving profiles is still on an uptake, and I think the kind of SIPs we are seeing from the middle class and young investors who are coming into the zone of earning salaries at 21, 22, I think that points out to a very buoyant stock markets for the next 5 to 6 years.
Hmm.
We may, for about 6 months to 8 months, not give the stellar performance which we've been used to, but I
Hmm.
think it's definitely a time to invest rather than be hesitant to invest.
So, in terms of valuations, do you see comfort has gone into where when it comes to large caps, but there's also some value in small and mid caps, or should should investors really be looking at a bottom up stock picking approach at this point in time?
Well, there are pockets of the market which are always overbought and pockets of the market where they're always underbought.
Hmm.
Uh, as an investment advisor, all I basically try to convince clients is you obviously can't, there's a spectrum of what, 7,000 stocks. You obviously can't know everything about everything. uh, you can basically, because of the top 30, 40 stocks, they're so well researched that you can keep up with it. The research
Yeah.
reports coming up with everybody and they're in the news. So I would say the frontline stocks is where you should dabble on your own if you like, and if you have the capability to understand the balance sheets. I think definitely pick up your 10, 15 top stocks and do that yourself. But especially on the mid cap and small cap size, and especially where there is a lot of information that you may not be privy to, because the kind of disclosures those companies have is far lesser than the frontline companies. I think there you need a specialized fund management team which would look after it, with be it a PMS, be it a mutual fund. So I would say you could probably keep the large cap investing to yourself, and the mid cap and small cap, they have a lot of value, but you need your asset allocation right as per your age and risk profile. But then that definitely makes sense to give it to someone who studies that at a closer quarter.
Mm-hmm. So, in terms of themes or stocks or sectors, if you can talk about what are you buying and selling in this current market?
See, if you're looking for places where I still find that it's both growth and safety, I think private banks, it's a very well harped scheme over the last 6 to 8 months. Everybody has spoken about it, but a lot of them have given returns and come back. Let me take about ICICI Bank, gone to 600 plus, come back to about sorry, gone to a certain amount and come back. I was talking about SBI and jumbling up the two.
Yeah.
HDFC Bank, HDFC, probably in the larger ones, these are places where, these themes have been spoken about for the last 6, 8 months by every investment advisor. And I think though they haven't given the kind of returns that they could give, I think this is still a theme I would play out for the next full year. Let
Okay.
there be any correction, I'm happy to buy any of these good, well managed private banks at any price. So after seeing 920 odd, if you're seeing ICICI at about this 850 level, HDFC Bank, which has really not fallen, but if you look at a 3 year CAGR, it's not giving you much.
Hmm.
So probably all of these look to be very good investments with a 2 to 3 year perspective, not for a 6 month perspective.
Okay, and you did briefly talk about the IT names. I wanted to understand, after that underperformance in 2022, they've somehow come back into flavor and perhaps earlier than expected from most of the analysts who were believing that the IT stocks will be back in the second half. But perhaps the tide is turned too faster. At this point in time, would you say that it's, the right time to get into some of these stocks if you've been keeping an eye out on the kind of decline that we've been seeing on most of these stocks now?
So the main issue with IT, especially the large cap IT, was in growth in dollar terms. The mid cap ITs fell as a result of the whole market, and because mid caps were falling. Mid cap IT growth has not been an issue. If you see the numbers which most of them have put out, whether it is Persistent, whether it is Coforge, whether it is all of them, the
Hmm.
growth numbers haven't been compromised. Now,
Yeah.
the whole question mark is whether this will get compromised in the next 2 quarters or not. And these have run back to almost their 52-week highs which have been.
Hmm.
So at this moment, whether it is the large cap or the mid caps, I don't think they're in a phase where you can really buy. On a correction of 5 to 10%, probably you can start nibbling. But I think given that most of these stocks are up, I mean, I was looking at some of the mid caps at 26% up for the year when the
Hmm.
index is flat.
Hmm.
So against a flat index to buy something which has moved up 26%, I think you could probably wait for some time. And I would probably be a little more hesitant to buy IT when they've already run up in the last 1 month. and when there is no growth potential, which is looking like, okay, it's very, very mouth watering. So probably on a dip, yes, not now.
Okay, understood that. Well, thank you so much, Anu, for being with us and sharing the insights on the markets and various pockets that we've just discussed. The markets, in fact, drifting lower as we inch closer to the closing of the day as well. 444 points gone for the Sensex, 60,875 as the current level. The Nifty is also down by 0.7% now. That's 130 points gone. 17,900 and thereabouts is where the Nifty is hovering near. Sharper cuts coming in from the banking space. It's down by 1.5% for the Nifty Bank, with PSU banks dragging lower. 1.8% of a decline for that one. Realty pack is down by nearly 2% now. So keep an eye out on all of these pockets. It does look like we are going to snap that 2 or 3 days of momentum that we've been building on. And again, looking at a close in the red zone in today's trading session as we wind down the week as well. And with that, we will wrap up this edition. But do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. Don't forget to subscribe to this channel, and also you can continue to engage with us on our social media platforms. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in.
Well, Mr. Prakash Luhia joins us for a quick chat. Mr. Luhia, thank you so much for joining us. The state of Uttar Pradesh is a land with very fertile land, good for food processing and agriculture both, and has very significant amount of crops. So, what do you think is the future when it comes to food processing in the state, sir?
It, I shared my views taking potato into account, right? And I think it is applicable for many others food agricultural items also. It is blessed with one of the best agroclimate and the soil. But only thing is we all have to join together to make it happen, right? Right from the seed to the